The Federal Reserve just issued a report. This is a biannual report, and in the report, they're actually saying that GameStop and AMC pose a risk to financial stability, and some measures need to be taken. What the heck are they talking about? That's exactly what I'm going to address in this video. So let's buckle up for these next 5 minutes. All right, folks, this just drop like literally now. All right, so social media, this is the picture of US Federal Reserve Governor Lael Brainard, chair of the Federal Reserve's Committee on Financial Stability. So they issue a biannual financial stability report, so pretty much every 6 months. And this was released today, this Monday, right? And the report noted that trading platforms offering a zero commission trading, fractional shares, and flashy and engaging graphics have helped recruit tons of retail investors, especially on the young side of the spectrum of the age, hence creating so many people that pretty much don't know what they're doing with the money when it comes to stock, because that's what Gary Gensler calls the gamification of investing or trading, which I don't totally agree with that, because so far we have proven to be beating the smart money, the Wall Street, not only on AMC, not only on GameStop, but when you look at who bought the dip back in 2020. People are retiring based on the money they made both on crypto and on stocks. 4% of Americans, I was reading this yesterday, 4% of Americans actually retired early because they cashed in the profits they made selling and buying crypto. So, moving on to the report, social media can contribute to an echo chamber in which retail investors find themselves communicating most frequently with others with similar interests and views, thereby enforcing the views, even if these views are speculative or biased. Well, this is not something new, because this was already present in the SEC report on GameStop. But the thing is, why is this different when it comes to retail investors coming together on a social public platform to talk about stock tips? When the billionaires and the Wall Street boys do the exact same thing behind closed doors, sharing information that is not even public yet, all right, on a forum or a platform that is not even public, there is nobody to be found talking about that, because when they use those insider stock tips, they are here to either screw the retail investors, all right, through manipulation, or to make big bucks. And whenever they get caught doing so, they barely return the money. They barely do have any repercussion based on the wrongdoing they did. Why? Because they have connections. Why? Because they are the so-called smart money, and we are the dumb money. So another way to say, just guys, this is just such a bull crap. This is just a PS thing to say about this whole thing on retail investors, because retail investors are not just people who are buying AMC and GameStop. No, the retail investor has been around in the market since many years, all right? 2020 just gave the opportunity through companies like Robinhood, and other brokerages to actually get it easier for retail investors to trade. But when it comes to investing, people were investing through 401ks, IRAs, 539, ESAs, for decades and decades and decades, all right? Now, they move on the report saying that the episodes that happen, with AMC and GameStop should be monitored, because they suggest that the financial institutions calibrate for the potential increased volatility that meme stocks phenomenon could endanger, and that more frequent episodes of higher volatility may require further steps to ensure the resilience of the system. Well, damn, I will be damn. Yes. In other words, you need to fix it. You need to fix it, because the AMC situation has not started. It's not being originated by the retail investors. It's been something that has been caused by the people on Wall Street, companies like Citadel, and simplex trading shorting AMC and GameStop and other stocks. And now it just turned out that they have been caught up in the middle of what they were doing, and they don't want to get out easily. That's the whole story around GameStop and AMC. It has nothing to do with retail investors trying to do anything else rather than just squeezing the shorts. Because now, even more so than January, it doesn't make any sense for somebody to short the company like AMC with the outlook it is looking at. So just to say, this is another BS thing from the Fed again, to actually make sure they have their friends with connections and with benefits like the Wall Street boys and the boys with the big pockets to continue to do what they always did so far, which is to pretty much get their way out of any type of wrongdoing, fraud, manipulation, insider trading, etc., etc. But when it comes to the retail investors now being on the right side of the trade, being on the right side of things, they started pumping and, shitting reports left and right, not addressing the main issue here. So I guess this thing will just have to drag for the amount of time it has to, because I can guarantee you nobody is selling until it's time to cash out.